Good morning and welcome to Bazaar Morning Call. I am Anuj, with me, Prashant and Sonia. We are, of course, in the middle of a very volatile phase in the global market. But overnight, very interesting development happened in the US. While the close was weak, on an intraday basis, the S&P 500 saved the June low by just about 8 points. The big question a lot of people are asking is that could we have some kind of a double bottom in the US, or is there going to be more pain which leads to a more pronounced bear market? We'll find out. The dollar, of course, still remains quite strong at 114, but for India there is a bit of a tailwind in terms of crude oil prices, which are now down to $84. So the FIS sell number of 5,000 crores is highest since June 17, which, by the way, was the day when the market made a bottom. So really all over the place. The SGX Nifty is indicating that we'll start with a bit of a gap up and then we'll take it from there. Morning, Sonia. Morning.
Hi, good morning, Anuj. Morning, Prashant. And this FI sell number is something to worry about, right? I mean, in the last 4 days, if you look at it, FIs have sold about 10,900 crores in total, and it's been a number that's gaining day by day. So 2 days ago, it was about 2,000 crores of selling. Yesterday, about 5,100 crores. And before that, much less. So all in all, if you look at it, FIs are sort of taking out money from the Indian markets in a big way. And I guess no surprises there because, you know, as Anuj was also pointing out, there's a large global rout that we're looking at. The Dow Jones now is officially in a bear market. It's down 20% from its record highs and 320 points gone overnight. The S&P 500 is now at the lowest level since 2020. And it's been 5 straight days of losses. So definitely these fears of a recession, fears of more rate hikes, more tightening, etc., has put pressure on global equity markets. Brent is now below $85 a barrel as well. For our own markets, we've hit that 2-month low. Do you think that the market could now play catch up? There could be incremental outflows from India because it hasn't happened up until now. Is that a big worry?
Yeah, that could be a bit worry, but Sonia, the price action of yesterday is indicating that if yesterday's low holds, it can be a reasonable low if it holds, because that was a 200-day moving average. The market bounced right from the 200-day moving average on the Nifty. So normally you defend the first test of 200-day moving average in an uptrend. Even if 2 weeks later, 3 weeks later, 1 month later, even if you have to revisit that and break it, or maybe break it 2 days later, for all you know. But the point here is that 2 or 3 points. First is, because yesterday's bar, the red bar, was so big, any rally today in the first hour would be vulnerable to be sold into, because there will be a lot of people who will be stuck with long positions. So what happens today is that the first gap up, perhaps you don't want to chase because it could be, as I said, vulnerable to be sold into. But then you see if it's holding yesterday's low. Holding yesterday's low and holding the first hour low. If that happens, then I think we could be in for, at least on an intraday basis, some short covering because of the kind of shorts that we have in the system. If, however, yesterday's low is gone, in that case, you should shift focus to the 200-day exponential moving average and the 200-day simple moving average. That zone is 16,900 to 17,000. That simple zone. And that is, my sense is, there will be a lot of effort to at least defend that. Yesterday in the decline, the FIs actually covered some shorts by about 10,000 contracts. There's still 90,000 shorts in the system. So let's see whether they cover or not. I think the index to track today is the Nifty Financial Services. It's Tuesday, weekly options expiry today. So expect a lot of volatility in the HDFC twins, the Bajaj twins, Kotak, ICICI, these kind of names. We'll discuss that going forward. On the bank Nifty, it's likely to open in the resistance zone, 20 and 50-day exponential moving average, which is 38,750 to 40,000. And keep an eye on the market breadth, because for the last couple of days, there's a lot of pain in the portfolios. The market breadth for the last couple of days has been very poor. Yesterday it was 1:10. So that is, I think, more important than just tracking the Nifty. Prashant, hi.
Anuj, hi. Sonia, hi. I mean, so it's more of the same, right? There is global market pressure, and it's led by financial conditions tightening, expectations of rate hike, recession fears, all of that. But what I'm going to do today is just highlight 3 points which tell you why many global market indicators measured by different things are actually flashing red, right? So let me just start with the first one. The US 5-year real yield is at the highest level since 2008. I mentioned 2008 because this was the global financial crisis. Now, you can argue about how you calculate the real yield in terms of the deflator, etc. But by some measure, the 5-year real yield is at the highest since 2008. Point number one. Point number two, US Treasury market liquidity, this is a Bloomberg indicator, is now almost as low. This is the largest, most liquid market in the world, right? A bond market in the world. The US Treasury market liquidity is almost at the lowest that we've seen during the height of the COVID volatility, which was bang in the middle of March 2020. Number three, we have long end US rates volatility also now at the highest since March of 2020. Again, indicates, that markets are, at least on the treasury market, starting to break a little bit, at least starting to shake a little bit, right? It could be a combination of a bunch of things. I mean, some have blamed illiquidity, right? Lesser liquidity conditions for this. There could be poor fundamentals at work. But also, all of this indicates fear. Fear that maybe we are entering into a little bit of a phase where markets kind of come unhinged. I'm talking about global markets, purely US in particular, at this point in time. Now come to the US market, equity market. So, we kind of, the S&P 500 just 8 points shy of the June lows, but for all practical purposes, we're almost there, right? We're at the June lows. The rise in the dollar index and the dollar against most currencies is completely unsurprising. I mean, we've always said this, when there is a little bit of risk off, there is uncertainty globally, money goes home, and home is the US and the US dollar. So we are seeing this push higher in the dollar. And by the way, if you there could be these momentary pullbacks. Things get stretched on equities lower, dollar higher, and they could pull back. But, for a durable trend reversal, I don't see very much by way of a reason at this point in time. Momentary, as I said, momentary pullbacks cannot be ruled out. The dollar itself has seen the largest two-day rise. This is the Bloomberg Dollar Index, has seen the largest two-day rise since March 2020. Actually, I mean, if anything, it's surprising that the Nasdaq outperformed the S&P last night. It could be, again, a function of the fact that the Nasdaq has done much more poorly. But tech is the one area which gets hit when yields move higher. And the nominal 10-year moved up almost 25 basis points in a single session, just short of 4%. Could you see, with these kind of things, could you see some amount of the risk of financial stability, instability rather, coming into the picture? It's possible, right? Markets have gotten used to some kind of government intervention. We're already seeing that, by the way. We're seeing it in a range of emerging markets. We're seeing it in the UK, for example. I mean, at least in terms of talk, not action so far. We're seeing it in Japan, with the yen hitting 145, 139, back at 145 against the dollar. Switzerland. I mean, we're seeing a range of government action and government intervention coming through, and it's possible we see more. I mean, we see something in the US. I mean, markets for the longest time, last so many months, have been asking and sort of calling out for a pivot, that the inflation problem is done and the Fed will ease off, take its foot off the pedal. It's not happened so far. But could we see something coming through if these conditions prevail? We'll wait to find out. Here in India, I mean, I think it's been detailed quite well. The market is still sitting on a lot of gains, relatively speaking. And could these global conditions chip away at some of these gains? I would say it's entirely possible for now in the near term. Sonia.
Absolutely. So let's see. For today, at least, the SGX Nifty is not too bad if you're a bull, indicating that the start will be in the green. So it's up almost 64 points right now at the highest point of trade. But there's lots happening, not just in the world of equities, but in the world of currencies as well. So let's get you some money market views this morning. We have a first comment coming in from Kunal Sodhani of Shinhan Bank, who says, the prospects for more aggressive Fed rate hikes and elevated US bond yields underpin the US dollar. Italy has elected Giorgia Meloni in a snap election and oil prices are cooled off further. The dollar index may once again test 114.5 levels. The Chinese central bank reinstates risk reserves for derivatives to support the yuan. Dollar-yuan pair should be eyed as the move reflects in the dollar-rupee pair as well. For the dollar-rupee, 80.90 acts as a support, while 81.75 may act as a resistance.
All right, let's listen to some opinion that we got from the Allianz Chief Economic Advisor, Mohammad Al-Arian, on global central banks and the rise in US, the very sharp rise we saw in the US Treasury yields. Listen in.
This is about governments and central banks being sources of volatility rather than volatility suppressors. So they are adding to the volatility in the markets. That's particularly clear in the UK, but also in the US with the Fed. And it's also about horrible technicals. It's quite a mess in some of these markets. And these are the main markets for the global economy. So it's not a good scene. Hopefully it's going to calm down. But we've also got to make sure that policymakers stop adding to the volatility, because that's what they've been doing recently. We have this relentless increase in yields, this relentless appreciation of the dollar. They are both bad news for corporates. They are bad news for the economy. And until we can break this cycle, and the reason why this last leg up in yields is happening, and the reason why this last leg up in the dollar index is happening, is because we are the safe haven. There are fires burning all over, not just the developing world, but the advanced countries, and we are the safe haven. And one consequence of that is our currency gets stronger, and our yields have to somewhat follow what's happening elsewhere in the world. So that is the tragedy that we're in right now. If we didn't have inflation, if we didn't have a Fed behind the curve, our yields would be coming down. But unfortunately, that's not our reality.
I mean, that's the point, right? U.S. is the safe haven, hard currency market with, and any uncertainty, money goes home. That's what we're seeing with the dollar. Well, Dean Kim is head of global research product at William O'Neill and Company. Is joining us right now to take some questions. Dean, great to have you with us here. Thank you very much. Should we see some momentary pullbacks across markets, be it yields, be it equities, be it the dollar, because of maybe just positioning? Otherwise, for a durable kind of turn, do you see any reason as well, or not really?
Yeah, great question. So the setup right now is that U.S. market reacted negatively to Fed's raising rates last week, as well as stronger than expected CPI numbers. So in the market, we've had 6 failed follow-through days, and we're testing June lows. And should we break that level, we're looking at 6 to 7% downside to the next level of support. Both indices are 25 to 30% off highs, but in a typical bear market, historically, you would suggest that we could see up to 40% or more off highs. So I don't think we're quite done yet. Now, inflation remains a thorny issue for the Fed, and they will likely raise policy rates another 150 basis points or so. And that's according to the dot plan in January, up until January. Now, the flip side of this is if you look at the bond market, how they're forecasting inflation, inflation is estimated to rapidly decline to 2% by the end of next year. And this is according to the forward inflation break-even data. So in the meantime, the US dollar is spiking again due to Fed action last week. And this has had a ripple effect across global markets, with most of the markets in downtrend currently. But I think the silver lining is that, if you look at bond market and how they're forecasting inflation, it's going to come down rapidly next year, which means that, as we've heard Mr. Al-Arian say, the Fed is behind the curve. That certainly seems to be the case, but they are intent on fighting inflation at the moment. And until we see signs that CPI is coming down below expectations, or ironically, we see bad data or bad economic data starting to come out, I think this is when the market's going to bottom. The logic here is that the bad data will prompt the Fed to cease raising rates and become much more dovish. So until that point, I think we're going to continue to see volatility. Now, mind you, the market is a bit oversold right now, and we may see some, a rebound in the market. But we don't think that's going to last. We think definitely we're going to test June lows and potentially break it until, like I said, either the CPI number comes down or we start to see bad economic data.
Dean, hi, good morning. What about India? We have been an outperforming market despite the last couple of days of fall. While the debate in the US is, are we back in the bear market? In India, we're just 7% away from all-time highs. Your thoughts?
Yeah, so definitely India has been a shining star amongst global markets, developed, advanced, all included. Right now, we're at a critical point. The market's testing the 200-day moving average. Should we break that level? I think we're looking at 56,000 for the Sensex, which is at the 100-day moving average. That's about 2% below. And then, if we break that, then we're looking at 55,000. But, when I look at the market, it's fairly resilient. And that's because I think inflation in India is pretty stable at around 6 to 7%. It's been that way for quite a long time. And as well, GDP growth is still, pretty much positive, although India is slowing down a bit into 2023. So what I would say is, keep focus on those names that are working. And now is about the time you may want to start to think about trimming positions on those stocks that are overextended to the upside.
Okay, so 56,000 is the next level to watch on the downside on the Sensex, although you do believe that the market is very resilient. Got that. Dean, what are your thoughts on which are these stocks that have sort of extended and now perhaps you'd be a bit cautious? Is it in the banking space? Is it in FMCG? Because these are two pockets that have done quite well up until now.
Yeah, I see them, pretty much scattered all over. For example, like Ambuja Cements, they're pretty much extended. CG Power, Tata Investments, Tube Industries, Varun Beverage. These are all names that have done very well, but now we're starting to see some signs that, we may see some profit taking. And so, I would just say keep an eye on those. But definitely they're pretty much far above the 200-day moving average. And those are the candidates that you might want to think about trimming.
Right. Dean, the IT services index, have you looked at it? How are things? I mean, that's the one large grouping in the market which is not seen any meaningful bounce, even though broader Nifty, Sensex and other indices have done that. How is that looking, the IT services space?
I think they're still on a downtrend. I haven't taken a close look recently, but, unfortunately, they're kind of grouped into overall tech sector globally. And, they haven't done well so far this year. I think we need to see some signs that the tech sector is going to bottom. And again, that's not until, we see Fed backing off and when we start to see some bad economic data, I think that's when the tech sector is going to bottom.
Okay, so that's on the tech sector. Any other key levels? What are the levels that you're watching out for on the bank Nifty, for example? And, what about key stocks like, say, something like a Reliance that has started to now correct a bit? Any thoughts there?
For the banks, I think we're taking a look at make sure it can find support. Let's say the 50-day moving average. For instance, SBK, State Bank of India. We want to see the stock kind of hold support at the 50-day moving average and kind of bounce from there. Other stocks like ICG, ICICI is pretty much the same setup. But should we lose support at the 50-day moving average, then we're looking at, further downside. So I would be cautious. But, let's see if we can hold that 50-day moving average support. In terms of Reliance, I haven't taken a look recently, but, I think also, could be wary of, the stock, make sure that we can find support at around 2250, that sort of level, and see if we can bounce from there.
All right, we'll leave it at that. Dean, thanks a lot for joining in and giving us your view. So that's the word coming in on the markets and the way forward for equities. He says that's 56,000 on the Sensex, which is the 100-day moving average, is the next level to watch out for on the downside. But the Indian market is fairly resilient and he's not worried about a large shakeout from here on. Let's slip into a quick break. We have lots of stock-specific action to track today, so we'll get to that in just a bit. In our special Top 10 segment, we're looking at Power Grid, Maruti, Mahindra Logistics, SBI Cards, Sterlite Tech and Amara Raja Batteries. That's on our radar on the back of positive news flow. And Power Finance, Embassy REIT and Nazara Tech are likely to open in the red. So more on that coming up. Welcome back to Bazaar Morning Call. This morning, the SGX Nifty is trending in the green. The US futures are actually higher. So despite the US markets having a very weak run overnight, the US futures are now up almost about 100 odd points, indicating that the start maybe later in the evening will be in the green. And a lot of Asian markets are also trending in the green right now. So do keep an eye out on that. But let's find out what you should be doing with individual stocks. Anuj, what are you looking at today?
So, as I said, today's weekly options expiry on financial Nifty, so I'll keep an eye on both HDFC and HDFC Bank. In any case, these stocks have started to see a lot of FI selling again. So, right at the 20 and 50-day moving average. So, from the technical point of view today, the last hour in particular, I think these will be important stocks to track. So, I'll keep an eye on both of these.
All right, Anuj, thanks very much for that. Now, the big story, of course, has been with regards to Power Grid, but Abhimanyu is joining in now, tracking both Power Grid and PFC. Abhimanyu, over to you.
Having discussed the proposal of acquisition of a majority stake by Power Grid and REC, government sources have indicated that the government has decided to continue REC as a PFC company. The government has rejected the proposal for acquisition of a majority stake in REC by Power Grid. It remains to be seen whether any further consultations with stakeholders or any interministerial consultations will take place in this regard. The reasons behind this decision are yet to be known, but clearly for now the status quo in this issue will be maintained. The government is yet to come out with a detailed reasoning in this regard, but clearly for now the status quo will remain in place, and the government has rejected the proposal for acquisition of a majority stake in REC by a Power Grid.
Okay, thanks a lot, Abhimanyu. Let's move on. Mangalam is joining in. He has Mahindra Logistics on his radar. Mangalam, hi, morning.
Good morning. So Mahindra Logistics has gone ahead and made an acquisition. What they've done is they bought Rivigo's B2B enterprise business for about 225 crores in cash. Now, Rivigo has two businesses, full truckload and B2B. So it's the B2B vertical that they've bought, and that's a business that does revenues of almost 371 crores. The revenues have been declining from FY20. That's primarily because e-commerce itself has seen a bit of a decline in terms of overall business from FY20 levels. Of course, it is much higher than pre-pandemic levels even now. The important part is Mahindra Logistics' overall revenue was close to around 4,000 crores in FY22 and 1,200 crores in the first quarter itself. So this acquisition will aid their revenue by about 8 to 9%. But the important part is that it helps them leverage the networks that Rivigo has, and incremental revenue as well as synergies is something we're looking at. I mean, the basic rule of thumb is if they're paying 225 crores in cash for this, basic return of about 10%. So any incremental benefits over 20 to 25 crores in their overall performance would make this acquisition accretive.
Okay, thanks, Mangalam, for that. Let's go close to Sonal then. She's tracking Embassy REIT. Sonal?
Yes, I'm tracking Embassy REIT because sources suggest that Blackstone will be selling 7.7 crore units in that particular real estate investment trust, and this is via block deals which will be amounting to 2,650 crore rupees. The offer price is at 345 rupees per share, which is a decline of 1.7% or a discount of 1.7% to yesterday's closing price. IIFL, BofA, Morgan Stanley are the brokers to the deal, and just an alert, Blackstone had also sold their complete stake, that is 9.16% stake in Mindspace Business REIT. So this is the other REIT where they will be selling some stake via block deals today.
Okay, thanks a lot for that. Well, SBI Cards is on our radar. Abhishek is here to tell us why he's tracking that today. Abhishek, over to you.
The August data by RBI is out, and over there, it looks like the performance of SBI card is better than industry average. So total cards is up 2% on a month-on-month basis. This compares to a decline of 0.2% that you are seeing for the industry. The total spends is up about 1.24% month-on-month, which is a decline of 3% for the industry level. So average spends, however, is down about 0.8% month-on-month. No taking away from the fact that in terms of card issuance, they have gained market share for the first time in last 3 months, and they have gained market share in spends as well. The first time in last 5 months, the market share in spends is at 17.43%. That compares to 16.7%. So expect the stock to be in green today.
Okay, thanks a lot for that. Well, we're tracking a couple of auto stocks as well. Maruti is on our radar. I'm going with green over there. It had that big bang launch of the Grand Vitara yesterday. They've launched the mid-sized SUV Grand Vitara at a starting price of 10.5 lakhs, and it goes all the way up to about 19.6 lakhs. The important point is the bookings were very strong. 57,000 units have already been booked so far, And if you look at pricing, it's not too bad. Actually, the hybrid variant is about 50,000 rupees more than the Toyota Hyryder. So it's within that pricing range itself. Now, Maruti is trying its best to plug the gaps in the portfolio and is looking to regain market share in the passenger vehicle segment. Let's find out what brokerages have made of this move. Morgan Stanley has an overweight. They have a target price of 9839 on the stock, which is well above the current market price. They say that market share gains are likely with these new launches, and also the yen depreciation can provide some margin cushion for Maruti. Nomura remains neutral though. They prefer M&M in this sector because they say that this mid-sized SUV space is highly competitive with the Creta, Seltos, Hyryder, Aster and Kushaq. So it will be hard for Maruti to penetrate this space, and hence they are still still neutral on that stock. The other stock I'm watching out for is Amara Raja Batteries, and I'm going with green over there as well. Now, the company has approved a merger between Mangal Industries, which is the plastic business of Amara Raja. They've approved the merger of Mangal Industries with itself. Now, the share entitlement ratio is about 65 shares of Amara Raja for 74 shares of Mangal Industries. JP Morgan put out a report where they said that the integration of the plastic business from the promoter-owned entity is positive for Amara Raja Batteries, and it's positive for margins as well. The management has guided for 75 to 100 basis points EBITDA margin synergies because of this, and there's a 2% EPS accretion from this transaction as well. The legacy business should continue to deliver 14 to 16% margins, and the promoter shareholding will rise. All in all, it's positive for Amara.
Oh, no, absolutely. So that's Amara Raja in focus. But more stocks with news flow. Vahishta is standing by with that list. Vahishta, hi, good morning.
Hi, good morning, Prashant. Well, first stock is Nazara Technologies, where Tamil Nadu cabinet has approved the ordinance to ban the online gambling in the state. The next is Sterlite Technologies, wherein the Sterlite Global Ventures shall sell the entire 80% stake in Impact Data Solutions to Hexatronic Group, and the initial consideration is at £9.6 million, and the additional earnout consideration is capped at £7.2 million, which will be based on the Impact Data Solutions EBITDA. The last stock is Hindustan Construction Company, wherein the company completes its debt resolution plan, and this would reduce the debt on its books to 3,500 approximate crores, which would save 400 crores annually in the interest payments. Back to you.
Okay, thanks a lot for that. So those are a whole host of stocks to look forward to. Here's a quick recap in case you missed out on any of them. Positive news flow is on stocks like Power Grid, Maruti, Mahindra Logistics, SBI Cards, Sterlite Tech, Amara Raja Batteries and HCC. While stocks with negative news flow, there's Power Finance, Embassy REIT and Nazara Tech. But there's lots that's happening in the world of commodities. Brent crude has now slipped below $85 a barrel as the dollar has surged. Manisha Gupta is joining in to give us an update on that. Manisha, hi, good morning.
Morning, well, yes. In the last couple of sessions, we've seen nearly 8 to 9% of a decline coming in for the crude varieties there, and we are down by 19% in the month of September itself. The only reason that you've seen a halt in that decline and the prices are trading flat is because there is a potential supply disruption from a Category 2 storm called Ian, which is expected to make a landfall in Florida by the end of this week, but it will cross Gulf of Mexico. That is where 15% of the U.S. crude supplies are kept. The other point supportive is that you have the OPEC and allies meeting on 5th of October, and there are statements from some of these oil ministers suggesting that with the kind of price decline that we have seen in the last couple of weeks, there could be further output curbs that OPEC might intervene with or suggest, and that is what is keeping the prices where they are right now. But the metal prices have continued to decline yet again. Whether it's copper, zinc or lead, we have seen 2 to 3% of a cut coming in for all of these. Aluminum prices also declined by 1.5%. So metals is a sector which continues to decline even today.
All right, Manisha, thank you very much for that. Well, that's commodities in focus. We'll take a quick break here. Prakash Diwan will be joining us for some fundamental stock analysis in a bit from now. We'll also be joined by B. Tyagarajan of Blue Star to talk about demand trends as the festive season is upon us. Be back.
Welcome back. The SGX Nifty is indicating that we'll have a positive start, 67 points higher. And this is because global markets are looking slightly better, especially the US futures, which is where most of the cues are now coming from. And that's looking slightly better. So most of the markets have seen a bit of a bounce. The US, remember, yesterday on the S&P 500 went very close to the 52-week intraday low, the June low, and sort of managed to save that by about 8 points. Prakash Diwan is with us. Prakash, good morning. Thanks for joining us. Prakash, let's start with some of these stocks where now we are beginning to see some big, unwinding the Adani Group stocks, cement stocks, Ambuja, ACC. Do you think there's more left here, or would this be a buying opportunity?
Good morning, Anuj. So, I think it's not surprising. The risk off that we are seeing prevail in the market and deepen with every passing day would kind of, see some sort of sell-offs in these overvalued counters and sectors. So there are pockets of exuberance which will see a little bit of rationalization and consolidation thereafter. But if you ask me fundamentally, they're still not within that value zone of sorts from a valuation perspective at all. You'd have to wait for some more easing off on those prices to kind of see that happen. And selectively, it'll be businesses that will not get impacted, which are far more insulated. So, namely, you would have the ports business that could probably continue growing, given its inorganic growth as well. From the cement pack, I think this whole thing of the M&A wave that we were kind of expecting to be unleashed immediately might not happen so soon. People will focus on their organic capacity expansion more than just inorganic growth at the moment. So all that conjecture will probably start getting into a bit of rational rub-off. And then from that perspective, I think, I'm not saying Ambuja or ACC might not continue to do well, but the rally might not be as spectacular as what we've seen in the last 1 month or so. So it'll probably grow inch up gradually. So you could add it into a portfolio if you have a 3-year horizon, but otherwise wait for most of these stocks to, a lot of these pockets to kind of ease off. And there are new pockets emerging, there are new sectors, themes emerging, which still offer a little bit of reasonable risk reward. So that's where people should probably be focused on.
What are your thoughts, Prakash? Good morning. On SBI cards, the data is looking good. The performance in August was better than the industry average. And SBI cards has also gained market share in spends, which is, I think, the first time in the last 5 months. Is this a stock that you like?
So, good morning, Sonia. So, not particularly. I have never been a big fan of this space. And very few listed players there, or to be honest, a pure play credit card game. But, globally what's happening is, and India more so, at a pace that is uniquely frenetic for us, the adaptation of other payment mechanisms is probably going to leave cards, in a spot which is not very high growth anymore, as much as you've seen globally or in the US. And in that space, this particular change that you see in market share is probably because Citi and Axis, once that merger happens, will see a little bit of a blinking. So once the biggest market leader or one of the biggest players blinks, you'll probably see some market share shifts happen. So it could be SBI, it could be HDFC at some point, ICICI Bank with the cards business. So you'll see all the market share shifts. Because my sense is a lot of the Citibank customers might not have the same, comfort going into the Axis relationship immediately. And they would kind of, not use their cards till they've tried it out and got into that comfort zone. So that transition is vacating some space. But I'm not a big fan of this space, as I said earlier. But SBI cards probably seems to be doing well from what data we see. If people were happy with that kind of a thing, but it might not last too long is my view, Sonia.
Prakash, those who are carrying maybe leveraged positions, because I mean, things happen so quickly, both on the downside and upside, right? You get caught on the wrong foot, and then you're stuck waiting for a better price to get out. Or, I mean, what's your overall sense though? Is this we may get momentary pullbacks, but overall there will be a little bit of pressure. The bias is on the downside. So what should one do?
So good one, Prashant. So I think, if you recall about a month back, we kind of started getting a bit cautious in terms of the way valuations were stretching, and India was the only performing market. And performance and outperformance particularly comes with a heightened level of risk. And that's exactly what we are seeing play out in the market. But, one good thing about this overall texture from the global cues that we are attuned to, and there's nothing domestic that's moving our markets at this point, to be honest. We'll have to wait for earnings season to kind of start flagging of some moves. For people who are stuck with stocks where they're seeing erosion happen so rapidly, I think you need to be patient if fundamentally the stock picking selection and the portfolio construct is positive. Unless it was a trading punt which didn't work out, and you would have to get your stop losses triggered. But from a investment perspective, I think the time to invest is great at this point. October will probably be one of the best months in hindsight. We thought June was that, but probably you missed out, and October is giving you those opportunities. The risk assessment, but globally, if you see, everybody's talking about a recession, everybody's talking about tough times, and when that happens, the actual risk is much less. The perceived risk is too high at this moment, and I think that will translate into a lower level of actual risk in the markets, and that's where value investors will probably benefit. Who have the courage and a view which is slightly more long.
Okay, well, just stay on. We'll just come back to you in a bit since the festive season is kicking off. We thought let's get some consumer durable companies to tell us about how demand is trending, right? B. Thiagarajan, the managing director at Blue Star, joins us now to discuss demand trends as the festive season is upon us. The company recorded strong growth on all fronts in Q1, although their margins are yet to recover to pre-COVID levels. Mr. Thiagarajan, good morning and thanks for joining in. First, if you can tell us, how is festive demand shaping up? I know it's too early, but what are the initial trends suggesting? And, between rural, urban, tier 2, tier 3, where are you seeing a maximum recovery in demand?
Good morning, Sonia. It's a pleasure to talk to you. Today is the foundation day of Blue Star. We were incorporated 79 years ago. We have entered the 80th year. So in my own career, I'm seeing perhaps the 42nd festival season. I think it is looking good. It is looking extremely good in tier 3, 4, 5 towns rather than the big cities. The dealers are stocking up. And in any case, for air conditioners, it may not be a big season, that after summer, again, it comes back only towards February. But having said that, if you compare with the previous year, I think we are already ahead of the pre-COVID levels of demand. That's the forecast I can see from what dealers are saying.
Mr. Thiagarajan, hi, congratulations for today. As you said, it's a big one for Blue Star, all the employees there. Just a quick one on how big is the not October actually, I mean this entire festive season, how much does it make up as a percentage of sales every year, roughly? You just said that after summer, demand usually comes back in Feb, but this period, is it significant?
It will be around 20% of the annual sales. I'm talking about quarter 3.
Okay.
As far as room air conditioners are concerned. But prior to the festival season, even B2B business, does well because many people expand the showrooms. Actually, right now, we are fighting hard to get many showrooms, restaurants, shops, boutiques getting ready for the festival season. In fact, B2B demand is very significant this year. Massive expansions are taking place across the country, including Tier 1, 2.
Fighting, that's an interesting phrase, signifying the demand rush, right?
Because of the supply chain disruptions, right? That everyone is wanting to open the stores before Diwali.
Right.
And therefore, you have to mobilize manpower, you have to mobilize material. While manpower is not the issue, material mobility is the thing that, I have been watching the debate. There is on one side a fear of recession, so you play cautiously in terms of inventory management. But in this particular situation, we may have to overstock, anticipating the growth. That's why I use the phrase fighting to cope with the demand. So B2B as well as B2C, it is looking good.
Right.
If you ask me after 3 months what is going to happen, I am not sure, but we are well prepared.
B2B is how significant? I mean, it's a meaningful chunk, right, for your business, for Blue Star?
We are around 65% of our business is B2B.
And that is doing very well, you're saying?
Extremely well. Our order book is all-time record of around 4,000 crores as of 15 September. So the order finalizations are happening. It is big infra as well as small commercial showroom boutiques.
Okay.
And significantly, you take places like Belgaum, Tuticorin, Aurangabad, all around there is optimism. That's the significant difference between the cities and Tier 3, 4, 5.
Particularly for a unitary products business, which is refrigeration, both in terms of commercial as well as residential, you've seen a good growth. I mean, in the quarter gone by, your revenues actually doubled in the unitary product segment and EBITDA was much better. Can you tell us about the demand trends? Do you think this kind of growth is sustainable? Because the summer was pretty scorching and now, we'll get back into that season. Any thoughts on how demand could sustain?
I would like to believe that the demand will be sustained, basically because our penetrations levels are lower, that we are still at some 7% household penetration for room air conditioners. In commercial refrigeration, the country is equipped only to the potential of less than 5%. The ice cream demand is growing, processed food is growing. So therefore, deep freezer demand is very high. And you have cold chain infrastructure coming up, commercial kitchens coming up. So therefore, in the unitary product segment, I would like to believe that this demand is sustainable. And in fact, we are minuscule compared with many other countries in these two categories.
Right. Mr. Tyagarajan, could you tell us what is the share of imports for inputs? Talk to us a little bit about what copper prices are doing, how that is impacting, how that is expected to impact a margin. Just a little bit on those things. The currencies are having very, very volatile moves, right? Even the dollar. Across the board, is there any impact at all?
The finished goods dependence on import has substantially dropped. Only certain niche categories, some equipment may get imported. It is predominantly the raw material and components. I am here in Vietnam today. The copper prices are coming down, and as I had mentioned in our last interaction, the margin improvement we will see only in Q3 and Q4. In Q2, we had raw material which were procured at old prices. So I don't see a margin improvement that will happen in Q2. Having said that, you do have the exchange rate to that extent of some 20% worth of components which are supposed to be imported still, and India will continue to depend on those imports.
Okay, you've also set up a wholly owned subsidiary in the US to sell products. Can you tell us a little bit about that? What is the kind of addressable opportunity you see there?
Blue Star North America Inc. is the new baby for us. As I had mentioned a couple of quarters ago, you are seeing the China Plus One supply chain redesign that is shaping up. Now, there are products which US would like to consume from India, like variable refrigerant flow systems or the inverter-based air conditioning systems, both heating as well as cooling. And as you're aware, our exports are to the tune of only around 100 million USD. We had set ourselves a goal that it should become 300 million USD within 5-year time frame. So it is going to happen from Europe. It is going to happen from United States. So we have gone ahead and incorporated a company, and we have also appointed a CEO there.
Okay, Mr. Tyagarajan, it's a pleasure, sir. Thank you very much for joining us. Great speaking with you, and good luck to you and the business. And congratulations once again on the Foundation Day, as you told us earlier. Thank you.
Thank you very much. It was a pleasure interacting with you.
Well, that's a pretty positive commentary, Sonia, all around.
And I think what really stayed with me is he said that there's only 7% penetration currently of room air conditioners, and there's a big addressable opportunity that he sees.
That is. I think that is well understood, right? Yeah. But the B2B business, right, which is, and that gives a sense of. He said that cloud kitchens are doing very well. Yeah. We all know that. But in tier 2, tier 3 cities, he named so many cities where small businesses, etc., are booming.
Refrigeration.
They want to put the AC in, get the thing running off the ground before Diwali, right? So I think, that kind of talks to general buoyancy in terms of what business people are expecting, both small and big, but small in this case more, which is heartening to hear. That growth is continuing to take. Prakash Diwan is still with us. Prakash, you heard that commentary from the Blue Star management, I hope. Any thoughts?
No, I think the key takeaway is that you could look forward to a festive season that probably surpasses all records from the past. I can tell you, anecdotally, the preparation that's going on, and he was absolutely right when he used that word fighting to deliver in time, because you just have 29 days to go for Diwali, and the impact is going to be significant in terms of whatever is happening, whether it's electronics, whether it's food, whether it's garments, apparel. You name it, and there is this whole restocking drive that's currently on. Specifically on Blue Star, the only issue with them is they've had very lumpy revenue growth from the institutional business in the past. So if this is significant enough, that would probably ease out that volatility. Otherwise, of course, it's a great franchise and a great name. But at this point, I would look at other things which are far more promising from a value perspective.
Okay. Anything else in this space itself?
So Sonia, in this space, actually what happens is that the component suppliers are going to benefit tremendously, whether it's the Voltas refrigerator or the air conditioner that gets bought or a Blue Star brand. You have a lot of the compressor makers which are benefiting, a lot of other components that are part of this value chain. So you could probably look at some of those. They're much smaller names, to be honest, and very low liquidity. So the institutional interest is not there, and that's why they're not much talked about usually. But you have that space that's also kind of looking promising from a long-term micro-cap investor.
Okay. Prakash, stay on. We'll just come back to you. We have to get into a short break. On the other side of the break, Mitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. So do stay tuned in.
Welcome back. The setup this morning is that we are in for a bit of a uptake. But remember, yesterday's red candle was so big, so huge, that any bounce will be vulnerable to be sold into. But we are also very close to the 200-day moving average, which is something which the markets normally defend on the first test. So let's see how things move. This is, of course, also the expiry week. Sudarshan Sukhani and Mitesh Thakkar joining us now. Gentlemen, good morning. Sudarshan, yesterday you said just step aside for a bit, and then we'll take stock of the situation. After yesterday's big red candle, what's the trade now on the Nifty if we open with 50-60 point uptake?
Yes, yesterday we had that interesting, phenomena of the market actually rallying 150 to 200 points from intraday lows before retreating back again. That told us that perhaps 17,000 or 16,950, 17,000 may be acting as a temporary. The key word here is as a temporary support. There was some bargain hunting. There were short sellers who were willing to close their positions. So I think today is an interesting day. It's worth buying into the market today, and we never know how the markets behave. So I would be a buyer in the Nifty and the Bank Nifty both in the morning itself. Either keep a 100-point stop loss from your opening price, or just buy a call, which could be the cost itself could be a stop loss. But I would buy it today.
Okay, fair point.
This is an important trade. It's not something you want to carry.
I got it. So maybe just try a buy trade today. Can keep a stop of about 100 points or so, or take call option, and the cost itself is your stop loss. Mitesh, good morning. Your index trade, both Nifty and Bank Nifty?
Morning, Anuj. My sense is that the structure is still weak, but I do expect a bounce back. So we have kind of exited or taken good profits on the short sides of the trade, but I'm not very keen to go long. The idea being that while we have hit the 200-day average, I think yesterday's gap will again provide a significant level for the index to watch out at the upper levels. So 17,200, 17,300 zone, I think could be difficult for the index to get past. And eventually there's a good chance that the 200 average might give away because the short term and the daily charts remain on the negative side. So we would explore maybe shorting at higher levels, but not buying into the index. But yes, we have clearly taken profits on the short side of trades because of the 200 average, as well as the fact that there was a gap around the 16,950, 17,000. So there is some support here, but it might not last for a couple of attempts. Maybe the first attempt will hold out. We'll see bounce back, but I don't think we'll get past 17,200, 250 in a hurry.
Okay, well, let's talk about individual stocks then. Mitesh, what are you looking at on the buy and sell side today?
Good morning, Sonia. I have a mix of buys and sell calls. On the buying side is Asian Paints with a stop at 3,400 for targets around 3,500. Metropolis is a buy with a stop at 1485 for targets of 1555. And on the sell side is Glenmark, sell with a stop at 372. It's a conditional sell. So once it breaks yesterday's lower 365 levels, sell with a stop at 372. Look for targets of 350. And Hind Copper sell on a bounce back around 109 with a stop at 112.5 for targets of 103.
Okay, so some copper is a sell. Sudarshan, more buys and sells or equal?
Well, now you know what I do, Anuj. I don't even have to say it. More buys than sells. I think today would be an interesting day for the bulls. And understand it's a very temporary phase. We'll see what happens later. So I'll start with Coforge. Coforge, something is happening with IT stocks. It may be because of the US dollar, values or whatever. Now, Coforge is now moving sideways rather than down. It hasn't participated in that big decline because most IT stocks did their own declines earlier. So that's a buying opportunity with a stop under 3,300. It's a blue chip company. Infosys is a buy. I think, as I told you, something is happening in IT for whatever reason. It's a buy with a stop around 1355. The only intraday short is Naukri, which is InfoEdge, where a very large red candles are being successively made. So maybe it's an intraday short with a stop above 3775. And these are the two buys and one short sell. So I'm not taking the fourth call because the index itself is a call.
Okay, all right. Thanks a lot for that. Let's take a quick commercial break. On the other side, we'll have the pre-opening rates. We'll also connect with Ankit Agarwal of STL. Its subsidiary Sterlite Global Venture